And once again, welcome you to MEFA's Financial Aid 101 presentation. This is typically given to the parents of seniors in high school and some juniors as well. So we typically think it's for folks who are filing their financial aid forms this year or possibly next year to go to college. So as I said, we have about an hour tonight to go over some of this presentation and give you all this information, but it is a lot of information. So I don't expect you to retain every single bit of it. You will have the slides and the recording to refer to, but also you will have MEFA's guidance in any way you choose to absorb that information. You can go to MEFA.org, scan this QR code. It will send you to MEFA's emails, or you can sign up for emails to send you one or two a week with information that will be relevant to you based on the grade of your student or students. So you seniors will be getting financial aid presentation or financial aid tips. You parents of juniors or juniors in high schools themselves will be getting admissions information, just to sort of let you know of what's coming up and what you need to be thinking about as the relevant time approaches. So you can connect with me for that way. You can also connect with us over all of our social channels. So there's Facebook, Instagram, X, LinkedIn, our YouTube channel, and our podcast. So we're just trying to be there for folks when they need us in the ways that they like to absorb information. You can also call us, email us. We have free guidance available. You can set up a one-on-one appointment through Zoom with any one of us. Throughout this presentation, so I see somebody has already enabled the chat, I'm sorry, the transcript function. So if you would like to have a live transcript recording as I'm talking, you can do that. If you are going to be asking questions, which I do sort of recommend that you do, we want this to be as conversational as possible. Don't use the chat, use the Q&A. I called out my colleague Stephanie earlier. She will be answering the Q&A questions as they're coming in, and I'll be checking with her every so often if there are really popular questions or good questions that somebody has that the whole group might benefit from hearing from. So, as I said, don't be shy to ask questions as we go. MEFA is a resource here for you. Before we start our presentation, I want to talk to you a little bit about MEFA. MEFA is the Massachusetts Educational Financing Authority. We were created by the Massachusetts State Legislature back in 1982, and we have a public service mission to help families to plan, save, and pay for college and career readiness. And I've touched on a few ways that we do that already. And you can go to MEFA.org and take a look at all of our tools and calculators and content and guidance and all that stuff there. We also do fixed interest rate educational loans, and we offer the state savings programs as well, the U Plan prepaid tuition program and the U Fund 529 plan. So that's sort of all that we do. And again, the main point I think that I would like you to take from this is that we are a free resource for guidance to help you with any questions that you might have between now and when your student goes to college. Now, what we're going to be talking about tonight, the types and sources of financial aid. What is financial aid? What are we talking about? How do you get that financial aid? The application process. What forms do you need to file and what are they going to ask you on those forms? Once you do file those financial aid forms and the government or the colleges are looking at all the information that you put into those, how do they decide what financial aid you're eligible to receive, how much you're eligible to receive, and how much you'll get? So how are those decisions made? And then once they are made, and they send you a financial aid offer, that is the school sends you a financial aid offer, and you have a balance due. How can you pay for college? So, Stephanie knows I've been at MEFA for a really long time, and the most common question I get by far is from parents who are just starting this process, and they say, "How do people do this?" Right? So we will talk about how people do this. And then finally, just some things, suggestions for what you can do now, immediately upon sort of hanging up from this webinar. What can you do to prepare? So, to get right into it, the types and sources of financial aid. What is financial aid? Essentially, it is money set aside to help students pay for college. Sounds very simple, but it comes in three main varieties that you should know. First is grants and scholarships. This is the best kind of financial aid that there is. It's gift aid. It doesn't have to be repaid. So hopefully when you see your financial aid offers from your colleges, you'll see a grant or a scholarship or maybe both there. It's just money that comes right off the bill. And we'll talk about the difference between a grant and a scholarship in just a few slides. The second type of financial aid is federal work study. This is money set aside at a college for a student to earn by working a job on campus. And so if you see your financial aid offer when the time comes, which will be, if you're a senior, which will be next spring or so, in all likelihood, and you see a federal work study award amount there, that is the amount that the student can earn throughout the year by working a work study job on campus. So if the student gets work study and you want work study and you have questions, reach out to the financial aid office. You know, work study amounts are not going to be massive dollar amounts because the student has to be working to earn that money. And, it's only going to be a few hours a week because they're a full-time student. But if you, again, want this work study award, the student has to get that work study job. They have to work the hours. They have to earn the money throughout the year. Otherwise, you don't get the money. Different colleges do their work study in different ways. So some colleges may expect the student to go on and find that work study job all on their own. Some colleges might make it a little bit easier and sort of send a link to all of the job openings for work study students to all the students who got work study. As I said, different colleges will do it in different ways. So if you have questions on how to proceed, you should reach out to your financial aid office. And that's something that you'll be hearing me say again and again over this hour that, if you have any questions about how things are to proceed or any special circumstances on your financial aid, reach out to the financial aid office at the college. They are the resource for you. And then finally, the last type of financial aid are federal student loans. So I don't mean any loan that you might get as an example of financial aid. The MEFA loan, for example, even though we like it, we think it's a good loan, it's not financial aid. Any other loan that you might get from a bank or anything like that, that's not financial aid. I'm really speaking about one particular loan program, which is called the Federal Direct Student Loan Program, and it has certain benefits associated with it that make it financial aid. It's the only type of loan that is financial aid, and the only thing that MEFA actually recommends that everyone should do is that if you are going to be borrowing anything, you should start by exhausting your federal direct student loans first because they are the best options for students. So, to sum up, three types of financial aid: grants and scholarships, the best kind, doesn't have to be repaid; federal work study, money for a student to earn by working a job on campus; and federal direct student loans, the only type of loans that are aid. And I'm going to talk about why right now. So, most people think because we talk a lot about student loans and we hear a lot of stories about students taking out $100,000 of debt or whatever it might be, and they have to pay this back. A lot of people assume that students can borrow just whatever they may need in any amount to pay for college as long as they promise to pay the loan back after they graduate. And that's really not the case for most loans. So most loans are going to be approved or denied based on credit. So somebody has to have credit and be credit worthy, and most students in college don't. So the first benefit for these federal student loans is that the student is the sole borrower. They don't need a co-applicant because there is no credit check to be approved. So that's the first thing. You're filing your FAFSA, and by filing your FAFSA, you're going to be eligible for these loans. The second benefit that comes with these loans is that they may be eligible for some level of subsidy. So what do I mean by that? When a student is in college and they are in classes, they have these federal direct student loans, let's say, they're not expected to be making payments on these loans while they're in college. The loans are said to be in deferment. If you have a subsidized loan and you have a loan that's in deferment, there's no interest that's being added to that loan while it's in deferment. If you have an unsubsidized portion, there is interest that's being added to that. And so some level of federal direct student loans will be unsubsidized, but you are eligible, depending on the family's financial need, for a subsidy on at least a portion of it. And that is something that most loans just don't have as well. The interest rate for this current year is 6.39%. That's fixed. And so every year you're going to be applying for financial aid. And let's say if you take your loan for the 25-26 year, it's going to be at 6.39%. That loan will always be at 6.39%. Next year, if you need a new loan, it will probably have a different rate, and that rate will be fixed as well. So there'll be different rates. If you look on the right here, you have your annual loan limits. So this is the amount that a student can borrow in their own name through the Federal Direct Student Loan Program every year. So you can see there's a cap on it. Freshmen are eligible to borrow $5,500, sophomores $6,500, juniors $7,500, and again, seniors it stays at $7,500. And so this is the amount that students can borrow. And so this is why we say if you're going to be borrowing anything, you should start with these loans first because oftentimes it's not enough to cover the entire balance due. If it is, fantastic, but oftentimes it is not. So if you take as a student all of the federal direct student loan money that you can every year, you are going to leave college with about $27,000 of debt in your own name as a student. Now remember, these don't go into repayment while the student's in college. They're deferred until 6 months after the student graduates or leaves the school. That's when the repayment begins. And the standard time that a student has to repay that once the repayment begins is 10 years. So if you took out your $27,000 and you're taking 10 years to repay that at a 6.39% fixed interest rate or somewhere around there, the very rough estimate on your monthly payment would be about $300 a month. It would take you about $300 a month to pay that balance off in 10 years. And if that's fine and easy for you based on what you're making, great. If it isn't, if you would like that amount to be lower, it's very flexible in how these loans can be repaid, which is, I think, probably the final category of benefits here is that this flexibility with how you can repay these loans. You can stretch that repayment term out from 10 to 20 or 20 plus years. Make the monthly payment a percentage of your discretionary income every month as a graduate. So there's a lot of options that just don't really exist with other loans. If you go to graduate school, you can put these loans back into an in-school deferment. And there's programs like public service loan forgiveness, where if you are, let's say, on that extended repayment term of 20, 25 years or so, and you're working for a qualified nonprofit for 10 years, and making payments for 10 years, at that point you can apply for the balance of that loan to be forgiven. And there are also other sort of need-based forbearance and deferment programs as well. So being federal loans, they have a lot more repayment options than most other loans do. These are reasons why federal direct student loans are considered financial aid and why we recommend that you take them first before moving on to other types of loans. Okay. Now, as far as where financial aid comes from, I've already talked about the federal government a lot. But they manage things like the Pell Grant, which you may have heard of. It's a need-based grant for students. Work Study is actually a federal program because they send work study money to the colleges, and the colleges allot that among their work study students. Those federal direct student loans that I just talked about, and there are tax credits as well that you can claim for paying tuition. The website for all of these programs is studentaid.gov. Now, the state that you live in also gives out financial aid in all likelihood, and for us, of course, that's Massachusetts. You may have heard of programs like the Mass Grant, the John and Abigail Adams tuition waiver, the Copeland Scholarship, and the no interest loan. These are all examples of state-based financial aid, and the agency that sort of gives out the state-based financial aid is not MEFA, actually. It's OSFA, the Office of Student Financial Assistance. They manage those programs. And you would need to file a FAFSA to be eligible for your state-based programs as well. The college and universities themselves give out a lot of financial aid, and it's a lot in that gift aid realm, so grants and scholarships. And some colleges have their loan programs as well, though that's a bit rarer. Just to let you know, I like to sort of call this out because people do have the idea, and it's, it's not necessarily wrong that college is, or at least can be, very expensive. But I think people don't have the other piece of information there, which is that there's a lot of financial aid that's granted every year. So you can see this number is $190 billion granted in the year 23-24, which is the most recent year that we have data for. And that's about where things typically stand. So there's a lot of financial aid that's granted every year, and I just like to point that out. Finally, there are outside scholarships that you can apply for. So think about outside scholarships on two levels. So local scholarships and national scholarships. Local scholarships, things from like local businesses and local organizations, the Elks, the Kiwanis Club, whatever it may be, your local dentist or shop or what have you. For that, we recommend that students talk to their high school counselors as they are typically the best resource for what's available for local scholarships. For national scholarships from bigger organizations like CVS or Coca-Cola or whatever it might be, we recommend that students create a account with a scholarship search engine. And so you should only use free scholarship search engines, never pay to have a scholarship search done online. There are plenty of free, reputable, effective scholarship search engines online. We link to a few there, mefapathway.org, that's our college and career portal. Fastweb.com is another. So, and there are others, but basically the way those work is the student would create a profile, and based on their profile, there would be filtered scholarship opportunities that they could apply for. So again, outside scholarships, typically smaller dollar than people might think. Again, I think there's an idea that there are all these organizations or businesses or whatever giving out 10, 20, $40,000 scholarships. That's really rare. It might be 1,000, 2,000, 5,000, whatever it may be. But, that helps and cast a wide net and apply for as many as you can. Okay, so that's where financial aid comes from. There are two ways financial aid is assessed and awarded. And the first one we'll talk about is merit-based aid. When you think about merit-based aid, think about scholarships, and this is where we're going to get into the difference between scholarships and grants. So, merit-based aid is awarded in recognition of student achievement. So, again, think scholarship, academic scholarship, athletic scholarships, artistic scholarships. Whatever it is, it's in recognition of something that the student has done. The things to know about merit-based aid is that this largely comes from the colleges and universities. So everything that the federal government does, none of that is merit-based. Most of what the state of Massachusetts gives out is not merit-based either. So most merit-based aid comes from the colleges. And so some colleges give out a lot of merit-based scholarships to their students, and some don't. Some don't give out any. It's just a question of their policy and their capability. So this is the question that you can ask colleges if there's merit-based aid that they give out. And so, if you see your offers and you see scholarships from one and not another, it's not necessarily that that other college doesn't think that you are worthy of a scholarship. They just may not give them out. Um, that's the first thing. The second thing is if you get a scholarship, and again, like I said, you have to file for financial aid every year. So you're going to get a financial aid offer for the year. If you see one, you can talk to the college, and you should talk to the college and say, is this renewable or is this a 1 year scholarship only? If it is renewable, what do I need to do in order to renew it? So is there a GPA that I have to maintain? Are there any other benchmarks that I need to maintain based on the scholarship? Because the very few times that I've had parent sort of call me saying that they've lost financial aid from 1 year to the next and received less, it's because the student didn't qualify to renew their scholarship. So you don't want that to happen to you. The last thing I'll say is we're going to talk about financial aid forms and financial aid deadlines, and you should all check what financial aid forms your colleges require and what their deadlines are. We'll talk about the FAFSA, we'll talk about the profile, but they may have separate scholarship applications as well. So you just want to make sure if they do, you know what those are and when they need to be in. So that's merit-based aid. But the most of the financial aid that is granted in a year, most of that $190 billion is not merit-based aid. It is need-based financial aid. And so that is not based on student achievement. It's based on the family's financial need or their financial eligibility. And that eligibility is determined by the formula within the financial aid applications. So examples of need-based aid include things like grants. So grants is kind of like, the gift aid version of merit-based aid, but it's need-based. Loans, so, the not necessarily getting those federal student loans, that's not really need-based, but you're qualifying for a subsidy is need-based. And work study is need-based as well. And even though it is need-based, the student must be making satisfactory academic progress, and the school has to certify that the student is making that satisfactory academic progress as they move through their course of study to continue to qualify for need-based financial aid. I'm going to stop there and ask if there are any questions, Stephanie.
No questions yet, but I'm here to answer them if folks want to type them in the Q&A.
Excellent. Okay. So, what is the application process? How do we get this financial aid? Before we get into that exactly, I want to talk about the financial aid timeline and just sort of a high level of when things happen and when you should be looking to fill out your applications and all that. The first thing I want to say is that your admissions applications or your child's admissions applications, your student's admissions applications to be admitted to the college and your financial aid application, that both of those processes are separate, but they should be happening around the same time. And I say this because every year I get a call from somebody who's made a terrible mistake. They've applied for admission, waited to see whether or not they were admitted, and then said, okay, now I have to apply for financial aid. And I understand that process. But if you've done that, you've probably missed a college financial aid deadline. And if you miss a college financial aid deadline, you're not going to get financial aid from the college. So, in all likelihood. So, deadlines are really important. The best thing that you can do for yourself is to take a look at all the colleges at which your student is applying, or if you're the student in which you're applying, or may want to apply. Find out what their FAFSA deadlines are, because every college that you're applying to will get a FAFSA. And then see if they need another financial aid application. They may want one called the CSS profile, and we'll get into that a little bit later on. But if they do, what's that deadline as well? Um, so just really important. We have a college application manager that we link to down here. It's something you can print off, and we have all those things. Application deadline, FAFSA deadline, CSS profile, what's the deadline, etc. So you can do that, or if somebody in the family likes spreadsheets and they want to manage that, they can do that. Just make sure that you keep on top of your deadlines. So that's really important. The next thing I'd like to say is that there are different sort of timelines for applying for college. There's regular decision, there's early action, and there's early decision. So some of you may know this already, but if you're applying regular decision, it means that you're applying for admissions and financial aid with a deadline probably to get your applications in by February or March for financial aid. And so, again, check the college deadline. That's the most important thing, but that's typically where they are. If you're applying early, though, you may have an earlier financial aid deadline, just like you had an earlier admissions deadline. And there's two ways to apply: early action, and early decision. And you don't want to confuse the two. So early action is very simple, and it's just you're applying early, and you want to know early whether or not you've been admitted. Early decision is you're applying early, you want to know early whether or not you've been admitted, and if they do admit you, you are promising to attend that college. So this is what's called a binding decision, early decision. It's okay not to apply early decision anywhere, but if you are applying early decision anywhere, you should only be applying to one college early decision because that's really a commitment that you can only make to one college that I'm planning to attend if you admit me. Um, and just be careful about it because make sure you want to absolutely go to that college because you're sort of withdrawing all your other applications. And you're committing to attend that college really before you see a financial aid offer. So there are ways that you can sort of estimate your financial aid offer, which we'll talk about later on, and that's fine. But you never really know until you see the financial aid offer. So you just want to make sure that you're doing things in a deliberate way. Okay. Now we're going to talk about the FAFSA. Finally, and the FAFSA is the free application for federal student aid. It is sort of the main financial aid application that there is. You need to file your FAFSA and send it to every college that you're applying to. It's what sort of allows you to get federal aid or be eligible for aid from the federal government and from the state government. And really, most colleges base their need-based financial aid on the FAFSA alone. So it's really important. It comes online October 1st. It did that this year. You go to FAFSA.gov or studentaid.gov and select the 2026-2027 FAFSA for next year because that's the next academic year, begins August of 2026. And it's recommended that the student start the process. And the first thing you're going to want to do, and we'll get into this, is get an FSA ID. But the student should start the FAFSA, complete the student section of the FAFSA, and then email an invitation to their parent. And then their parent can go on and complete the FAFSA. The last person to complete their section of the FAFSA signs and submits the FAFSA. And you don't have to complete the entire thing in one sitting. Once you start a FAFSA, though, you have 45 days to complete it. And if you don't complete it within 45 days, it will delete. You can start again, but that's the window that you have. Once you start, you have 45 days to finish it. That's our link to our Understanding the FAFSA webinar there that you can go and see if you want sort of a deep dive into the FAFSA. And I mentioned this before. The first thing that you're going to want to do, if anybody out there is planning to file the FAFSA and does not have an FSA ID yet, you want to get one of those. An FSA ID is a username and password that contributors to the FAFSA need to, begin the FAFSA and to sign and submit the FAFSA. So every student needs an FSA ID, and so they can go to studentaid.gov and click on create account in the upper right hand corner there, I believe it is, and create their ID. And it's a username and password. As I say, it should take about 5 minutes to do. It will be tied to your social security number and date of birth information, your personal information. It will be your FSA ID for life, sort of. So next year when you're going to be using the same FSA ID. So as I said, every student who's filing needs one, and most oftentimes, parents need one as well. So if a parent needs to be on the FAFSA, and for most traditional students, parents will be on the FAFSA, the parent needs an FSA ID as well. Now, this is kind of the trickiest thing about the FAFSA because the FAFSA is actually very simple for most families these days. The trickiest part comes in who needs an FSA ID among the parents. Because sometimes only one parent needs an FSA ID, and sometimes both parents, each of them need one. And it all comes down to how they filed their taxes. So, obviously in the case of single parents, there's only one parent, so only one FSA ID. But if there's two parents, and the parents are both going to be on the FAFSA, and we'll talk about that in a second. If they have filed their taxes jointly, then only one parent needs an FSA ID. If they have filed separate taxes, even though they're married, or they didn't file taxes at all, then each parent would need an FSA ID. That's really the difference there. Now, you used to have to need a social security number to get an FSA ID as a parent. You don't anymore. So that means that parents who are not who don't have an SSN can get an FSA ID and complete their FAFSA online. And to do that, they'll just have to answer some knowledge-based questions pulled from their credit history. So every student needs an FSA ID. It's how they start the FAFSA. And oftentimes, parents, either one or both, need an FSA ID. Okay, so when you start filing the FAFSA, what actually goes on it? Well, the first thing, general information, name, date of birth, social security number, etc. The student's citizenship status. So in order to be eligible to file a FAFSA, the students need to be a U.S. citizen or an eligible non-citizen to receive federal financial aid. If you are not in that category, you're not eligible to receive federal aid. You may be eligible to receive some financial aid from your state, and that varies from state to state. So there's been an expansion in Massachusetts recently where some immigrant students under certain circumstances are eligible for Massachusetts state-based financial aid. But again, that will vary from state to state. You need to put the colleges where the student is applying. Remember, every college that the student is applying to gets a FAFSA, and there's room for 20 colleges on the FAFSA. Parents, which parents need to be included on the FAFSA? So this is an important point too. All married parents, each parent needs to go on the FAFSA, their income and information and assets and all that, including same-sex parents. Everybody goes on there. So all parents who live together, whether they're married or not. So if you're all in the household together and you're together and, parents never got married, each parent, their information goes on the FAFSA as well. In the cases of divorced or separated parents, the FAFSA is looking for information from the parent who provided more than half of the student's financial assistance in the past 12 months. Okay? Not the other parent, this parent. And if that parent has remarried, then the new spouse's information, their income and their assets and whatnot go on as well. Um, so this drives a lot of questions because understandably, people get sort of either concerned or confused about it. What if we don't know who that is, or how do we figure that out? They really want you to figure that out as a family. The guidance that we received is you could say that you say, oh, we split everything 50-50, but I paid for this cup of coffee that day, so that puts me over. They really want you as a family to figure out who the parent who provided more financial support in the last 12 months was. If you can't figure that out, you're supposed to put the parent with the greater income and assets. So figure it out, and that's what they want you to do. If a student is in a legal guardianship, legal guardians are not considered parents. So in that case, the student would file on their own without any parent information. They would be an independent student. They'll also ask the number of people in the household. That information is actually going to be pulled from the IRS automatically, but if it's different than what's reported for the IRS, they can make amendments there. And the number of children who will be in college for the year that the student is filing. However, that information is not used in the calculation to determine how much financial aid you're eligible to receive. Now, we talked about financial information. What financial information will be part of the FAFSA? What are they going to be looking at? It's basically four categories. Split it between parent and student, and then split it one more time in each category, income and assets. So parent income, parent assets, student income, and student assets. For most traditional students, they tend to not have really a lot of income or assets. So most of the weight in this calculation falls on the parent financial information, and most of the weight for the parents falls into the income. So there was a big simplification effort for the FAFSA that went on a couple of years ago, and it's really quite easy for most families to file. One of the reasons is they will pull the information from your 2024 taxes for this year because they look at the prior year, they call it, of income. They figure, you've already filed your 2024 taxes. They're with the IRS. We'll just pull those directly in and populate all the income questions on the form using your tax returns. And so in sort of the click of a button, all those questions are answered. So they're going to look at your adjusted gross income for that year. They're going to look at any non-taxed income or untaxed income that appear on the tax return as well. And so you must consent to the FAFSA doing that. That's one of the first questions is that, do you consent for them to go and pull this information in from the IRS? And you have to say yes if you want financial aid. Even if you're not going to be able to use it, you have to consent for them to do it. So that should be very easy to do. That's what they look at for income. For assets, that's what you have, right? So I think it's useful to start off talking about what they don't look at as far as your assets are concerned, what they don't think you should be using to pay for college. So they will not ask about the value in your retirement account. They will not ask about the value of your primary residence, the home that you live in. They won't ask you for the value of life insurance, and they won't ask you for family farms, small businesses, or commercial fishing businesses. Small businesses are defined as fewer than 100 full-time employees. So that's a pretty wide, leeway there for small businesses. What you do include as assets on the FAFSA are things like what's in your savings and checking account the day you file your FAFSA, any other investments that you may have. If you have second property, the value of that second property, businesses that are larger than 100 full-time employees, except commercial fishing businesses, um, include education savings accounts like 529s as apparent assets, and don't report the ones that you may have for other children um, that you're not filing a FAFSA for. And also, child support received is considered an asset. And debt is not reported except on assets. So what does that mean? It means if you have, for example, a second home that you're claiming as an asset, you're going to subtract the debt that you own on it from the value. So if the free market value for this property is $500,000 and you owe $300,000 on it, then you are going to assess that value at $200,000. That's the only place the debt is reported. I will say there's a lot you may have noticed that is not asked about here that may be important to how you plan to pay for college or maybe hamper your ability to pay for college. The FAFSA is a one size fits all form. They want to make sure as many people file it as possible, so they want to make it as simple as possible. If there are things that they do not ask about in your life that are relevant to how you're going to pay for college, you should reach out to your financial aid offices. And I'll say this again later on. They can make adjustments to the financial aid formula based on information that you give them. It's up to each college whether or not they will do it and to what extent they do it. But it is something that they do. And the more they know, the more they can help you with that. Okay, that's the FAFSA. The other big financial aid form that you may need to file is the CSS profile. And so oftentimes colleges want this form because they have a lot of money that they give out themselves. So it's a lot of private colleges that do the CSS profile. Certainly not every private college wants you to file a profile. But that's who basically, most schools that do offer it are private colleges. But they give out a lot of their own money, and they want more information than what the FAFSA can give them to make sure that they're allotting the money that they do have wisely. So the website for that is cssprofile.org. This is from the College Board, the same organization that does the SATs and the AP courses. So the biggest difference right off the bat between the FAFSA and the profile is not a free form. So it costs $25 to file your profile to the first school that you send it to and $16 for each additional college. Although there are fee waivers available if parent income is $100,000 or less, or the family meets other certain criteria, they're going to be eligible for that waiver, and the form will calculate that while you're doing it, so they'll know whether or not you need to pay the fee for filing or not. That also becomes available October 1st. And the other big difference, this is a more exhaustive form than the FAFSA, so they'll ask you more questions. And another big difference is that in the cases of divorced or separated parents, when you're going through and filing your profile as a student and you say my parents' marital status is divorced, they'll ask you to list your non-custodial parents' email address. They'll be contacted and they'll be expected to file a non-custodial CSS profile form as well. So they want information from everybody in the picture. And so there are fee waivers available. I'm sorry, fee waivers. There are waivers available if it's a situation where there's really no contact with that other parent. You can apply for a waiver for that non-custodial profile. And it's up to each college whether or not they're going to grant that. And the other thing is that they're going to ask again more questions. Probably going to ask you to list the value of your primary residence. They may ask you to list the value of your retirement account, although that probably won't necessarily be used in the formula. Colleges do have leeway to sort of look at the information on the profile through their own lens and request information. We do have a webinar on what to know about the CSS profile. You can register there by clicking or scanning the QR code. Aside from the CSS profile, I think it's a few hundred, over 200 colleges that require that form nationwide. Colleges may have their own institutional financial aid application as well. Just again, returning to the theme, you just want to make sure that you go on each college website, see what they need and when they need it. After you apply, the colleges or the government receive that information. The student, in the case of the FAFSA, will receive a FAFSA submission summary that's going to be emailed to everybody actually on the FAFSA. Colleges may request additional documentation if they have questions. We'll talk about that in the next slide. And then the colleges will review what they've been given from the financial aid applications and determine the offer. And so the financial aid offer is probably going to be sent around the same time, sometimes even with the admissions application. But you can review each college website to learn about their timing. Verification is that process that I was just talking about. I think a lot of you probably have been in contact with the colleges that you've been applying to, or your students have been applying to. You may have to have signed up on a portal or something. You just want to make sure that you're on top of the communication between the college and the student or the parents. Um, because sometimes you will get a notification that you need to submit material to satisfy, some questions about the financial aid applications that you filed. And it's not necessarily that there's anything wrong in those applications. It's just that, they may require in certain circumstances you to send in a tax return transcript if you were one of the families that couldn't use the IRS tool that sort of it automatically um, populates all those questions with your tax returns. They may ask you to send in a tax return transcript so they can verify. They may have questions on asset accounts or on, maybe a social security issue with how things look on the form. Maybe something from the profile and something from the FAFSA will look different, so they want to verify. Or sometimes colleges just verify a certain percentage of their applicants for no reason, sort of randomly. Whatever it is that they're looking for, and they'll be pretty explicit about what that is. You just want to make sure that you get it to them in a timely manner because they won't be able to finalize your financial aid offer until they get that taken care of. So just stay on top of the communications and know if they're looking for something. And again, use this point to hammer home that you want to be in communication with the financial aid office. You do want to let them know if there are things that don't appear in the financial aid application that should be taken into account, or if things appear a certain way on the financial aid application that they're not in real life. For example, if you have an inheritance, it may look like you have a lot of money coming in every year. You should tell them this is not what it is every year. This is because of an inheritance. If there's a job loss or a pay cut that happened from 2024, if you're making less money now, that's something they would need to know so that they can make adjustments to your financial aid eligibility. If changes occur after you file that are going to make it difficult for you to pay, make sure you let them know as well. And when you do get offers, if you want to appeal your financial aid offer and see if you can get more, that's something that you can do as well. You can reach out to them and ask respectively if there's anything more that they can do. Um, that, like so much in this process, will depend on the college. Some colleges may be more open to that than others, but the more they know, the more they can help you. Okay, any questions now, Stephanie?
No questions to share right now, John.
Wow. All right.
Actually, I
Yeah.
just got one that came
Oh,
in.
okay.
So why don't I give you one?
Okay.
Um, so they're wondering if somebody does have an inheritance, does
Mm.
that not reduce their financial aid? Or does it reduce their financial aid? I guess it depends on the school, but I'll let you answer that.
Yeah, yeah, yeah. So, well, actually, so this I'll give you my answer, and you tell me your answer, Stephanie. Let's see, because I'm
Okay.
not sure. So, I guess it would depend on how that inheritance came in and when it came in, right? So, if it was reflected in any of the assets or tax information, um, for the FAFSA, I guess if it's sitting in an account and you have to put it there, you can let them know that it's an inheritance, and you can see if the college will make an adjustment for that. That's my answer. What's your answer?
Yeah, sometimes if it's a one-time inheritance or any kind of, settlement or something that
Yeah,
you can't expect year to year, you'd
yeah,
want the college to know that. So They may reduce the amount they consider of it. They may not consider any of it. It really depends, but it is one of those unique circumstances you want to talk to this college about.
Yeah. All right. Great. All right. So, how financial aid decisions are made. They've got on this point in our process, the college has all of your information from the financial aid forms, and they're determining how much you're eligible to receive and how much you're going to get. So, when we're thinking about this, I want you to keep two figures in your mind because these are the important figures. One is the cost of attendance. And the cost of attendance is how much it's going to cost to go to a particular college for 1 year. And that includes everything. So it includes billed or direct expenses like tuition and fees and food and housing if you're living on campus. Those are things that are billed. They show up on a bill. We know exactly how much they're going to cost. And it also includes things like non-billed or indirect expenses that don't show up on a bill, but nevertheless will be part of paying for college. So things like books and supplies. You don't know how much those are going to cost, when you're admitted to college. Transportation to and from college, and personal expenses throughout the year. All of that is the cost of attendance, and every college will have their cost of attendance listed on their website. Every college will have a different cost of attendance, and actually different types of students within each college will have different costs of attendance. So think about, for example, commuter students versus students who are living on campus. Just by virtue of not having to pay food and housing, commuter students are going to have a different cost of attendance than students living on campus. But you should be able to find that information on the college website somewhere. So cost of attendance, that's one thing. So put that to the left side over here. The other metric you want to keep in your mind, the other number, is the student aid index. That used to be called the expected family contribution. I think it's a little more intuitive when I say that. But that is the formula within the FAFSA. After you put all your information into the FAFSA, your income, your assets, your household size, all that stuff, they're going to put all that information through a formula and come out with a number called the Student Aid Index. And that is the number, according to the formula, that your family should be able to absorb for 1 year of college. So you can do an SAI calculation on MEFA.org. We have an SAI calculator. We use the same formula. You can do it for the federal FAFSA formula, and the CSS profile uses an institutional formula. You could do it for that as well. A couple of things to know about the formula. Again, it's the same formula for every family. For the federal, income weighs much more heavily than assets. And I say that because people get concerned when they have assets that how can I make it look like it's not really my asset, or should I move it out so that the college doesn't see it? Um, Within the calculation, the vast majority of the weight is on income, and income is the main determinant of how much financial aid you're going to receive. They'll take anywhere from 3 to 5.6% of parents' assets into account as to what they should be able to pay for college for a year. So if you get $10,000, that's what, $560 they'll be expecting you to pay out of that. For income, they'll take anywhere from 0 to 47% of your adjusted gross income. So a much wider range there and a much higher ceiling. Um, okay. And the other thing that you want to understand about the student aid index, the amount that you're expected to pay for college, is that is not necessarily what you are going to pay for college. It's really more of a floor than a ceiling. So again, I want you to keep those figures in your mind. Cost of attendance, student aid index. The financial aid formula is the cost of attendance at the college minus the student aid index. Anything that's left after the student aid index is subtracted is what you're eligible to receive in financial aid. So I'll show you what that means with some figures here. So let's say that you're going to a college that costs $45,000 and your student aid index is, was it 5,000? Well, okay. So that means cost of attendance, 45,000 minus student aid index, 5,000 equals $40,000 of financial aid eligibility. So you got 40,000, we got to fill $40,000 full of financial aid here. We got grants and scholarships, 10,000 and 17,500, so that's 27,500 in gift aid, starting off pretty good. Student loans, again, this is our federal loan limit for freshmen at 5,500. We have work study at $2,000. but then there's unmet need. So just because you're eligible for $40,000 doesn't necessarily mean you're going to get all the $40,000 that you're eligible to receive. So it's fairly common, actually, probably more common than not, that there is some unmet need. So what you're actually ending up paying, even though your student aid index is $5,000, is your $5,000 plus whatever aid you didn't get, in this case, 5,000. So you would be looking at a $10,000 balance after your financial aid offer. So you can see what you're eligible for, but it's up to the college to grant financial aid, and you won't know until you get those offers what you actually get. So we talked about SAI calculators. You may want to take it a step further and go to a college and use a net price calculator. Every college website is required to have a net price calculator for their undergraduate students. Um, and it should work in a similar way to an SAI calculator. Should take you about 5 minutes to do. You put in income, asset information, household size, etc. And it should give you a estimated financial aid offer and a resulting balance. So it's to help you figure out what you would be eligible for financial aid and what you would be responsible to pay for a year at this college based on what you have. Word of caution about that, it's just an estimate, so it's not set in stone. Some colleges have tailored their net price calculators to be very reflective of their merit aid policies and things like that. Some colleges may have used more of a bare bones. And it's all only as accurate as the information that you put into it. But I think it's a good tool to use to get you at least some sort of idea as to what your resulting balance in your aid would look like at a particular college or particular types of colleges. So I used them myself when my wife went to school, and it was ended up being pretty close to what we actually ended up paying. Um, it's an estimate, but I think it's a good tool to use. Now, once you do get offers from your colleges, one thing you should understand is that even though you have the same eligibility or near the same eligibility from college to college, doesn't necessarily mean you're going to get the same aid at each college. So we have our three hypothetical colleges here. We have a student aid index of 5,000 at each and a college cost of attendance of $45,000 at each. So we're eligible for $40,000 of financial aid at each of these colleges. And you can see here, if you scroll right down to unmet need, you've got zero in unmet need. So you got $40,000 of aid at college A. You're fully funded. At college B, there's $7,000 of unmet need. So you're looking at a $12,000 cost. And at college C, there's $15,000 of unmet needs. So you're looking at a $20,000 cost to you. The other thing you want to make sure is don't do what I just did and scroll down to the unmet need right away and just assume, because the line items on different uh, aid offers can make a big difference. So if you see here, and again, we have the same eligibility at every college, $40,000. And if you scroll right down to unmet need and we got 5,000 at each, you may think, oh, well, we have the same financial aid offer everywhere. But no, College A has given us $27,500 in scholarship. College B, $10,000 less than that. And College C, $10,000 less than that. Where's the difference made up? It's made up here in the parent loan section. So you can see here, parent loans 0 from College A, 10,000 from College B, and 20,000 from College C. So it's worth it to pay attention to this because sometimes colleges do actually package a parent loan, most typically a PLUS. It's a federal loan program, it stands for Parent Loan for Undergraduate Student, in with their financial aid offer. And there's nothing wrong with a PLUS loan. It's a fine loan to have, but it is not financial aid. So it doesn't have any of those benefits that are associated with the federal student loans. And the other thing is you weren't actually granted it. Whereas the student loan, you have the loan, you just have to take it out. The parent loan, the parent needs to be credit approved for that. So it's not financial aid. You weren't granted it. You will have to apply for it. And so you just want to be careful. And that kind of drives home a point that we talk about a lot, especially in the springtime when this comes up, is that there's no real uniformity necessarily between the way colleges do their financial aid offers. So it can be very confusing to look at two, three, four, 10 financial aid offers and to be able to compare them in a way that you're comparing apples to apples. So at that time, we have a campaign that we do called Paying the College Bill, where we help families to actually look at their award offers and be able to tell them what they really have from one college to the other and what their resulting balance is at each college. Um, and so you just want to be able to, when the time comes, do that. You should sort of look at look at MEFA's campaign at that time. And also the QR code down here is links to our college cost calculator, where you should be able to go in, input each line item of cost and each line item of aid, and it should give you a resulting balance for up to, I think it's 4 colleges at a time or 6 colleges at a time. But that's a tool that we have to help you with that. Which brings us to paying for college. Um, and I'm going to assume we don't have questions. um, let's say we have a $20,000 balance due, which is not unusual. Um, you know, Going back to that question that everyone has, how do people do this? This is when they would call and ask, how do people pay for this? And so I know MEF as a lender, you could borrow that full amount, 20,000, and if you did, you would roughly, a very crude estimate, be paying back $200 a month on a MEFA loan or an educational loan. So the rule of thumb, and again, it is very crude, $10,000 borrowed equals a $100 a month monthly payment. So you may think $200 a month, okay, that's fine. But remember, this is year one. So you want to think about all 4 years together. So even if you can't pay the full balance due out of pocket, it is worth it to pay what you can out of pocket. Because once you've done your financial aid forms, you have your financial aid, and you have a balance due, there's really only 3 ways that you can pay this balance. And so it's best to break it up in this way. Past income, meaning any savings that you may have. In this example, the parents have $4,000 in savings, and let's say the student has 1,000, maybe from a summer job. If we put that in, we've already knocked the balance down from 20,000 to 15,000. So that's your past income. Present income, the money that you're earning while the student is a student. Now, I don't know many people, if I know anyone, who can sort of pay $15,000, a balance of $15,000 with whatever they have in their bank account after they're finished paying for everything else. But again, it is worth it to pay what you can. You don't have to pay the full balance due. And I like to talk about this option because a lot of parents don't know this, but colleges work, oftentimes at least, work with an outside provider to offer monthly payment plans. And the way that works is over the summer, you can sign up for one of these plans. There'll be a fee somewhere, I don't know, $20 to $100 maybe, to sign up for one of these plans, and you can set your monthly payment. So let's say in this case, the parents have said, I can pay $500 every month. Over the course of 10 months, that's going to be $5,000. $5,000 that you're paying directly to the college in tuition, that you're not borrowing, that you're not paying interest on. Because once we've exhausted past income and present income, the only thing that's left is future income or borrowing. So, borrowing in and of itself is not necessarily a problem, but you just don't want to borrow more than you can comfortably afford to pay back. So we could have borrowed 20,000, but now we've knocked it down to 10,000. Our $200 a month monthly payment is a $100 a month monthly payment. And again, over 4 years, that's the difference between paying $800 a month and $400 a month. And I'll say to the parents as well, this is important to you because remember I said earlier, most student loans, especially at this point when you've gotten your federal student loans, most educational loans, students can't get on their own. They need to have somebody who is a co-applicant who is creditworthy and can be approved. Most oftentimes that's a parent, though it doesn't always have to be. And I've heard many times from parents or other co-applicants from MEFA when they call up and they say, I know I'm a co-applicant, but it's not really my loan. It's really his loan. It's really her loan. But if you're on the loan as a co-applicant, it is your loan as well. It's going to be on your credit report and it will affect you personally. So how much you're paying every month will be important to you. So some conversations that you may want to have before choosing a college, or even maybe even to help determine what colleges you're applying to. You can go and search the school's net price. So what is the estimated cost of this college for me, for my family. Is it going to be worth applying to? Is this something I can pay for? I mean, I would never not apply to a college because of cost, because you never know from financial aid, but just be aware of it. And then finally, very basically, who is going to pay? Again, I've talked to many families over the years when it comes time to repay loans who haven't talked about it. And so students just assume that parents are going to be paying. Parents assume that students are going to be paying. So, if you have to take out, especially a good amount in loans, it may be worth it to say who is going to pay what and have that agreement set ahead of time. How many children will you be sending to college as a parent? And that is going to affect how much debt you feel comfortable taking on. Would community college be cost effective? It almost certainly would. We have free tuition for community college, free community college for tuition and fees in Massachusetts. And even before that, community college is probably the least expensive option. There are programs that we'll talk about in just a minute that start in community college and end in a four-year public. That can make things very cost effective. And remember to consider 4 years. Don't just get stuck on the year in front of you. I've had this conversation many, many times with parents who can just barely make it work the first year for their student's top choice school. And so you have the conversation. You say, well, okay, well, this works out for this year, but what about next year? And the answer is always, well, I'll worry about next year. But next year will come. So if you have to make a decision based on cost, it's better to make it up front. You can always transfer into a top choice school later on or a more expensive school later on. And it is where you sort of get your diploma from that people know. So if you do have to make a difficult choice, it is better to make it at the beginning. And also, one thing you should know is a change in federal policy that's happening. I've mentioned the PLUS loan a few times. There used to be no cap, and there currently is no cap on the PLUS loan. That is, you could borrow whatever it is that you need, any aid that you didn't receive to pay for the college. There was no cap. If you had $30,000 to as a college bill, you could borrow that through the PLUS loan program. As of 7/1/26, so July 1st of next year, the PLUS loan will be capped at $20,000 a year. You won't be able to borrow more than that per undergraduate student, and $65,000 total. So if you're doing the math there, if you're borrowing 20,000 per year, let's say, you would have enough for 3 years or so through that program. And then if you're in a four-year program, you'd have to go to another loan. So maybe something that you want to consider before you go down that path if you're considering a PLUS loan. Yeah, that's what I would say. Okay. There are, the good news is there are more state financial aid programs and dollars available than in past years. There's been expansions. Mass Educate is the free community college program, which I just mentioned. Tuition, fees, and potential book allowance for all students. Mass Reconnect is free community college for adults over 25 years of age who do not have a bachelor's degree. There is a Massachusetts state financial aid program called the Mass Grant Plus and the Mass Grant Plus expansion, which results in free or reduced tuition and fees for low and middle income students. And again, a potential book allowance at community colleges and four-year public colleges. Tuition equity law, which is the program that I mentioned earlier for some immigrant students to receive Massachusetts state aid and in-state tuition rates by submitting a MASFA, since they can't submit the FAFSA. The MASFA is the Massachusetts application for state financial aid. And then there are programs that have existed for a long time, like the Mass Transfer Program, which is a program that was designed to help students earn their four-year degree with little to no debt. And you start by attending a community college in Massachusetts. You earn your associate's degree, that is your two-year degree from a community college. And through the Mass Transfer Program, you can transfer all of those credits into a four-year public and finish that program in only 2 years. Now, remember, we have free community college in Massachusetts now, so you can start that Mass Transfer Program with the free community college program and transfer in. And it's a tiered program, so if you have maintained certain GPAs, you have other benefits like a guaranteed admission, tuition freeze from one year to the next, and even a tuition rebate as you're moving through your 4-year program. You get rebated 15% of your tuition if you maintain a 3.0 GPA. So that's a really great program. And the final one I'll mention is a regional program called Tuition Break. That's done through the New England Board of Higher Education. And that is, let's say you want to attend a public college where in the state that you live in because you want to have a lower cost. But your chosen major is not offered at a public college or university in Massachusetts. But let's say it is offered in a public college in Maine or Vermont or New Hampshire. You could attend that college in that program of study for a greatly reduced fee through that tuition break program. Okay, so what you can do now. This is just sort of seeing you through the next few months or the next year and few months, depending on what year you're in. I would just say, you can look at this at your leisure when you get the slides. But if you're a senior, file your financial aid forms, get your FSA ID if you haven't yet. You may be still adding colleges. If you're a junior, you'll be taking your SATs. You can start looking at colleges. You can start thinking about who you want to write your letter of recommendation. You can visit some colleges. Your next steps, again, we have some QR codes here. You can register for some other webinars there. You can reference our timeline for college admissions and financial aid in the middle and sign up for our emails on the right. We are here to help you with any questions that you may have. Just last night, we did a FAFSA event from 4 to 6 where we help folks file their FAFSA. We're going to be having another one in January, so you can look at MEFA.org for that. Other than that, this is our information, and I'm ready to answer any questions should anyone have any.
I don't see any in the Q&A, but if anybody has any, we'll wait a couple seconds if you want to type it in real quick. And if not, then we can end the webinar.
Right? All right. That was a lot of talking, so thank you for bearing with me.
Yeah, it was great. It was great, Jonathan. Good job.
Thank you.
And
Yeah.
yeah, it doesn't look like we have any questions coming in, so I think we're good.
Okay, great. Well, thank you so much, Stephanie. I appreciate you
Oh, you're welcome.
doing
Have a
that.
good night, everybody.
Yes, thanks everybody. Good luck.